So this morning I met with this nice young couple, and I just kind of wanted to share this with you because I think a lot of people don't think about this, and it was a really good learning experience for them and for me to realize that a lot of people, their lenders are not explaining this to them. So with this particular couple, they were trying to limit the amount they were putting for their down payment. So they had 3.5% they were going to put down, and they were going to go with an FHA loan. And that's what the lender told them they should do, is FHA loan. Now their FICO scores were close to 800, and there was really no reason for them to go FHA. And the reason I'm saying this, and again, it's a great loan for some people. If you don't have very high credit scores, you're very payment sensitive, you do get in with a little bit lower rate with an FHA loan, but you do also have mortgage insurance all the way till you move out of the property or refinance. So let me explain that a little bit more. So these particular people are thinking rates are going to go down, which most people in this market are thinking rates are going to go down, and they're going to refinance at some point in the near future and get a better rate. And there are no cost refinances out there where you can actually refinance for nothing. So with an FHA loan, that upfront mortgage insurance is 1.75% of your purchase price. So like, let's say you're buying an $800,000 house, it's going to be a little over $13,000. So you're going to actually have that added to your loan amount. So when you go to refinance, you're going to owe $13,000 more than what you would owe if you were on a conventional loan with that same 3.5% down. So you're going to pay that off. You're going to pay that in your monthly payment forever, because that's going to be part of your loan amount. The other thing is that you can't, like we talked about, cannot get rid of your mortgage insurance premium. So if prices go up and you actually end up with 20 or 25% equity, you cannot apply to have the mortgage insurance removed from that loan. So you are stuck with that mortgage insurance forever. So when you really do the numbers, if you're thinking about refinancing and you're thinking rates are going to go down, that extra couple $100 a month you're going to save in your monthly payment is going to get eaten up because of that $13,500 you're going to pay on an $800,000 house that you're going to pay in upfront mortgage insurance. So those are things that people just don't think about. They're just looking at that short-term fix of, this is the payment I'm going to be able to make. But you really need to sit down and go over those numbers, because if you put that $13,000 into a bank account and you just took $200 a month every month out, it's going to take a long time before that money is gone. So if you're going to actually think you're refinancing sometime in the near future, your better bet is to go with a conventional loan, not the FHA program. Now, if you are thinking about all these things and you want to sit down and talk about what's going to be the best program for you, please give me a call. I'd love to sit down with you, go over what is going to be the best program for you, because it's not always the short-term answer. You need to look at your short-term goals and your long-term goals and figure out exactly what is going to be the best situation for you personally. So feel free to reach out and give me a call. I'm Tammy Cicerello at Refinance of Santa Clarita, and I'd be happy to sit down and kind of go over all of the information with you so you can make an informed and educated decision. Have a great day.